How do you make money when the stock market is choppier than the chopped salad at Walmart? In order to survive and navigate these choppy markets as a trader, you need a fast and accurate trading strategy to profit. Traders, this year, we've seen months of volatile market news. One month, the corporations are posting record earnings, then the next day, our bestie Jay Pow Pow is sending the market into turmoil once again. The last time I saw a relationship this rocky was when I was still married to my ex-husband. Okay, I know, you didn't come here for marriage advice, because clearly I suck at it. You came here to learn actionable, no bullshit trading strategies that will work in today's market. In this video, I'm going to show you 2 ways to scalp and snatch up quick profits, all while keeping your account capital safe. We're focusing on scalping strategies that's tailored for tricky bear markets. So even when the market is choppy or very difficult, it's still possible for you to profit as a trader. A common misconception about scalping is that it's a fast way to make Lamborghini money in 60 seconds. And yes, I get it. Who wouldn't want that? But scalping can be extremely risky if you don't do it the right way. In this video, you're gonna learn my scalping strategy that works well whether the market's going up, down, left, or right. I'm gonna be teaching you the 3 criteria for scalping, the best indicators and chart setups, how to find the right stocks to trade, my go-to scalping strategy, which includes price action leading into the setup, strategy execution, and risk management. So if all that sounds good to you, don't forget to smash the like button. It'll tell me that you like my bad jokes. A really quick 101 for my beginner traders here. Scalping is a fast-paced strategy that involves buying and selling stocks within a very short time frame, usually a couple minutes or even a couple of seconds. When you're executing these scalping strategies, you're not waiting for the big moves in the market or the individual stocks, but rather collecting small bits of profit that's repeated throughout the day when the price action is correct. Yes, while scalping can be a good way to make some money, but it's not easy. It requires a good read of price action, quick decision making, and you often need a really fast broker platform to execute these trades really quickly. Before I get into the details of the strategy, let's start with the basics. How do you pick stocks to scalp? First of all, I would only pick a stock for scalping if it meets these 3 crucial criteria. Number 1, you need to see an above average trading volume both intraday and on the daily. Number 2, you want to see a chart breakout or breakdown on the key levels. Number 3, you need to look for intraday price action that confirms the breakout or rejection on the daily chart. Remember, like I said earlier in the video, scalping does not mean you pick some random stocks to go buy and sell all the time. That's usually how I see a lot of traders lose money. It's only by following these 3 criteria, only scalping these kind of stocks, and following the rules of the strategy that I'm about to teach you, that you can ensure to end up on the right side of the trade. Next, we're going to talk about the details of my chart setup, including indicators, and then after that, we'll talk about strategy execution. Before we do so, make sure to smash the like button and subscribe to follow along on the scalping strategy. So those 3 are my golden criteria for scalping, especially when it comes to picking the right kind of stocks to scalp. Now I'm gonna show you guys how I set up my charts and the highly requested indicators. So on the screen over here right now, you can see a recording of my scalp trades on CVNA and OMH, and I have my chart set up as follows. I have the daily chart on the left hand side over here, and then I have 2 intraday charts on top of one another. That I will switch between 5 minutes and 2 minutes on the intraday chart. And beside it, I have a montage, which is also level 2, where I place my order entries to buy and sell. And over here, I have my level 2, which is also known as the tape. Okay, back on the trading view charts, I think it's a lot easier for you to see and not so dark like daytrader Pro. So the reason you can see on my intraday chart, I often like to use a 5-minute or the 2-minute chart is because it gives you enough to see the price action for different kinds of stocks. For example, for a stock like CVNA, when it's consolidating over here, you can see on the particular day I traded it on the short side, when it's consolidating from 9:30 the open all the way till 10 o'clock, basically 30 minutes of consolidation, that's when I like to use a 5-minute chart to stay patient and wait for the trade to actually set up. And whereas if I was trading a super volatile small cap stock, especially when it's ripping on the day, like this OMH, which on the day I didn't trade on the long side, I shorted it on the second day, you can see this thing went extremely fast from, we're talking about $15 to $20, $30s to $50 in one day. We're talking about this like what, a couple thousand%? Then this is a case where I think it's better to trade on a 2-minute chart or even 1 minute like some of the other traders prefer. Because they move so fast and you want to be able to get the best price action reads with how volatile it is. We're going to talk about actually timing the entries later on with my demo, but this is just an overview of why I choose to use either 2-minute charts or the 5-minute chart. So we're back on my daytrader Pro, which is my execution platform. Once again, that's actually connected to my brokers. So you can see on my chart, we have CVNA on the 5-minute. You can see the only indicator I have is this VWAP over here. If I double click, you see study configuration, go to VWAP. These are my settings. Super simple, nothing fancy. But I do like to add the VWAP for pre-market and after hours settings. I have it checked over here to get an overview of the entire day's price action. Another one I use is the volume down here. So besides just like your average volume bar, which all the brokers you have should have this, another one I do add is if I double click on volume, I have the volume moving average turned on as well. So if I go over here, display the average line, I have the 13 volume average on. It doesn't really do all that much, but for me, it kind of allows me to see when the volume is kind of steadily breaking out or increasing. Because you're basically comparing the volume bar on the current time frame that you're trading with an average. So for example here, right? So if I see this is a high volume breakout through the key level here, then I look at this and know that, okay, this is actually a real breakout, not like one of those fake outs. A really good example of both of these indicators working together, the VWAP and volume once again, is on the trade right now with CVNA. You can see, I know it's a little bit small, but you can see on this day, after I place the order, the stock is steadily breaking down. So that's what allows me to stay in the trade because you're breaking down VWAP, that yellow line over here, which you can see yellow line that started pre-market and now it's underneath the red to green dotted line and the stock is breaking down. And below that, you can see the volume is significant. That looks like, like pretty much 900,000 shares in the 5-minute candle. If you compare that with the previous day over here, right? It's a volume breakout to the downside. So a lot of times I'll take a look at all these things together, the two indicators, and gauge whether I should enter, stay in the trade, or get out. Another good example is this trade on GT. You can see, yes, I did short it off the $15. Again, I'm going to talk about the actual strategy later on in the video, but really quick, showing you how the indicator works. Yes, I want to see a breakdown to VWAP. And want to see how it acts around that VWAP indicator area. You can see that's why I covered some really quickly. I covered about 400 shares, a small position, but I want to see it break down and see the volume increase after the stock break down that VWAP area. So if I fast forward here, you can see that volume is indeed significant. We're talking about 1 million shares on that breakdown volume here, the red candle, breaking down, staying heavy, the stock can barely bounce, etc. So that's why I chose to stay in a trade because first of all, stock is below VWAP and there's a lot of volume on the sell side. As you probably already know from all of my YouTube videos, most of my strategies involve scalping, momentum, and shorting. All of those things will require a very fast broker platform. And I have an exciting promo from one of the premium brokers I personally use, Centerpoint Securities. If you're trading with over $30,000, you can use Centerpoint to day trade with 0 commissions for 60 days. And that's not all. You'll also get access to Daytrader Pro for 1 month for free. That's the trading platform you see in all my videos. That's another $150 value for free. To get this offer with all the freebies I just mentioned, you can sign up to Centerpoint Securities down below. And now let's get back to the video. Okay, so now that you learned how scalping works and how I set up my charts, let me share with you my favorite scalping strategy, which I call the technical bounce short strategy. I'm gonna teach you this trading strategy step by step by using a live trading recording of my recent trades on CVNA and GT. Both of these trades were simple trades that added up nicely to a very green day. Note I said simple, but not easy. Trading is never easy, but by having these strategy rules and criteria that you're about to learn, it's gonna level up your trading drastically. Okay, I know you already saw the partial trade I did on CVNA, but let's rewind a little bit and go back to the beginning. So we're back on the trading view. Let's talk about why CVNA meets all 3 of the criteria we talked about earlier. So remember, number 1, you want to see the stock trading above average volume, both on the intraday chart and the daily chart. So CVNA, you can see on the daily chart, the day I traded this was on this candle over here. You can see on the daily chart, the volume has been steadily increasing on this day, and all the following days. On average, it trades like decently around like 3-4 million. But on the days leading up to the day I started shorting the stock, it was trading, we're talking about 8 million, 6.5, 6.2. So that means both intraday and daily charts, the stock is increasing in volume. So that meets the first criterion of the scalping strategy. The second criteria is that you want to see whether the stock is breaking out or breaking down a key level on the daily chart. So looking at the daily for CVNA, you can see the 3 green days leading up to it. It's testing that level here around 1320s on the daily. Because if you go all the way back to like February, which is only 3 months ago, and I also traded a stock the exact same way, you can see it's testing that 1320s level on the daily chart for multiple days. This is a stock that can run for multiple days, 1, 2, 3. But when it's done, when it's finished and losing momentum, it can sell off for multiple days, which is very typical of these meme stocks. Anyways, that's the reason this $13, 1320s area is important on the daily chart. That's the key level. So you want to see whether the stock is breaking out successfully, holding over that for either a long, or if it fails to hold that key level and breaks down, and especially if it goes red on the day, which it did on this day, then it's actually perfect for a short. And the criteria number 3, which is the intraday price action confirmation, rejecting or breaking out above the key level. So if we look at the intraday chart on the trading view charts over here, you can see on this particular day, the stock gapped out to 1380s pre-market very early on very low volume. So once again, you need volume to trade the stock. You need volume to sustain the breakout. So at the open, you can see this thing actually opened weak, around like 1290s. On the 5-minute chart, we tested that 1320s multiple times, once, 3, 4 times for 30 minutes straight. That's the reason I prefer to use a 5-minute chart. Imagine if you were trading this thing on a 2-minute chart, break down, a lot of wicks, break out, another wick, reject. So just way too much chop. I used to trade these things on the lower time frames, 1 minute or 2 minutes, and it's just not worth all the losses. So that's the reason I don't use 2-minute charts when it's like consolidating under the key level like so. I use a 5-minute chart. When you're trading the strategy, you're essentially looking for stocks that have failed to break out to short into. Because if a breakout fails at a key level that we just talked about, it has a high probability of unwinding to the downside. And the same will be true if you're trading on the long side as well. You're looking for stocks that have failed to break down. So in terms of planning for the entries, profit target, and risk, everything involves around that daily key level that we just talked about. 12, 13, 20s, that would be the ideal entry, and that would be the risk area. If you're adding some slippage, maybe 20 cents, you'll be risking 1340s, 1350s. And let's say I got in around like $13 right here, around the VWAP area at the open. So I'm risking 50 cents to essentially with a potential of profiting all the way down here to, you want to zoom out to see the previous intraday supports. So around 1260, that'll be the first price target. And if you kind of zoom out a little bit more, there's some levels here, here from the previous few trading days. So all the way down to 1210. Pretty decent. And if you look at a daily chart, it actually has room all the way back down to 1080s, actually. Maybe not on the first red day, but definitely possible on the second or the third day to the downside. Because what did we learn earlier from the daily chart? This thing can break out for multiple days, as you see from February here. But also, that means it can break down for multiple days as well. Remember, there's money to be made on a long side and a short side. Bulls make money, bears make money, only pigs get slaughtered. Moral of the story is, don't be a pig. Remember to learn to plan for your trades and learn to execute the strategy the right way. Alright, we're looking at the actual trade now on my live trading recording. Bottom chart here on Carvana. You can see I already have some shares from the previous day at the starter of 1800 shares short at 1270s. You can see the stock is breaking down at $13 area we talked about. Ideally, that would be the entry. And I want to risk around that 1340s, 1350s risk. So 40 cents to 50 cents risk. You can see intraday, this is already breaking down. Fast forward a little bit. Remember, it was really choppy in the first 30 minutes for Carvana. On the top over here, you can see on the 5-minute chart, I'm attempting to short in partial sizes. I believe those were like 500 shares lot around that $13 area. Fast forward over here, you can see Carvana is trying to hold that $13 area. I added a little bit more. So now I have 3,000 shares on the short side with 1288 average. Remember, I want to see this thing break down that VWAP area, the indicator I use for confirmation, as well as volume. I want to see this is a 15-minute though. I want to see the volume breakout on the 5-minute chart when this thing breaks down, which is slowly trying to do. But decent volume, we're talking about like what? 600,000 shares breakdown, 600 to 700,000 shares breakdown. So the consolidation below that key level, the 1320s key level, gave you a really, really good entry. Now fast forward, definitely was not an easy trade. You can see the stock went all the way back to $13. So I'm down about 40 cents per share, 40 cents, still holding a 3,500 shares short. You're gonna see that I'm gonna get stopped out for a loss in just a little bit. Right here around that 1310, I stopped out some. So I got out about 500 shares just to reduce my risk. You can see that harsh rejection right here. That $13 got rejected. And we want to see it stay under that VWAP area. Finally breaking down that VWAP and also the $13 area. Very, I'm not going to say it's easy because it's not. Very hard to hold on to your trade, especially when you're technically down. It's always easier to hold onto a position when you're in the money. But in this case, I'm down unrealized negative around like $300-400. It's not that bad, but obviously I prefer to hold a winner instead. You can see it's finally breaking down. Once again, look at that volume. Another volume breakdown on the 5 minutes. Fast forward 1250s now. I'm up, a little bit over 30 cents per share. Okay, you can see fast forward to now 10 o'clock market time. You can see the stock is flushing, right? This is the unwind that we talk about. And you can see I'm trying to cover some 360 shares, 1220s. So now that's a nice little like 60 cents per share, but I'm still holding the majority for that $12 mark. And at the end, I actually swing the rest overnight for $11 the next day. So now I'm very green on this trade, finally. And you can see I'm covering even more into that $12 mark. So the first step for executing this strategy is that you want to look for stocks that are selling off after a failed breakout. So in this case for CVNA, that will be the rejection of that $13 and prior day's close area. And as you can see from the video, it actually retested that multiple times and even tried to reclaim that red to green. And because of all of these bounces, that's why it's important for you to follow the second step, which is to wait for a bounce after that failed breakout. You want to be shorting into all of these little bounces that you see on the 5-minute charts over here around key level, or as close to that as you can, to make sure your risk reward makes sense. Do not short into the weakness, do not short at support. If you short the stock when it's at, that $12 or $12.40s, then it's too late. And after you've executed step 1 and 2, next is step number 3. Basically is to assess the risk reward ratio, keep on watch as it unwinds to the downside, and take your profit on all of these daily support areas. And in this case for CVNA, as it unwinded and broke down all the multiple supports, the $12.40s, the $12, which later on you're going to see, I actually decided to hold the stock overnight short because the risk reward makes sense. Adding decent average about $12.80s, and I want to see it close around $11. So that'll be a good way to profit $1.80 per share versus just closing it on the day with 80 cents profit. Next, we're gonna break down the strategy once again on a different stock like you saw, GT. Before we do so, if you're enjoying the video so far, please remember to smash a like on this video. It does take me a lot of time to plan and getting these ready for you guys. If you enjoy it, just let me know down below, or you can ask me any questions that you may have. Thank you, I appreciate it. Now let's move on to the next stock, GT. The next trade I'm gonna break down for the scalping strategy is GT. This is honestly not even a stock that was on my radar before the open. I didn't even look at it. It wasn't on my scanner. Then I saw someone talk about it and I see the stock ramping up. That's when I jumped in and traded this for a true scalp. And honestly, I only traded this for like 5 minutes, 10 minutes maximum and made some decent profit. So let me break this down for you right now. So GT, this thing ran up pre-market 30 minutes before the open. As you can see, went from 1170s here, 9 o'clock, all the way to, at the open, 1450s, and it spiked into that $15 mark right at the open. So we're talking about like more than 20% increase in a span of 30 minutes. And the reason is because, you can see on the news here, Goodyear rallies after disclosing Elliott management activists took a stake in the company, which is a really, really positive news. And if you've been following my channel for a while, you know that when I'm trading any stocks that's gapping up with really bullish news, just like that stock I traded also pre-market, FNSCA, I think, I want to be conservative. Take my scalp, whether it's on the long or the short, and be done. So that's why scalping works really well for these kind of stocks. So looking at daily charts here, over here on the stock, you can see this thing basically after it broke out of that $13 mark, which it did pre-market, it doesn't have any significant resistance until 1360s over here. And then later on over here, around 1410s, then 1450s, over here, also like $15 mark. So these will be the important levels to watch if you were scalping this on the short side or the long side. So you can see intraday chart, the stock ran parabolic into the open to that $15.10s, rejected and sold off into that 1450s and down below. So that rejection is the first sign of why I wanted to enter the stock short. And if you were long, let's say you were long pre-market, you got the news early, then you want to be selling into all of these daily key resistance area. And hopefully you sold everything into that $15 or stop out everything at 1450s. Once again, this scalping strategy works for the long side as well. Now let's dive into the trade I took on this. So it's now the market open. You can see I'm watching CVNA. That was gonna be my main watch on the day. And it still is. It just, I wasn't expecting to see GT. That's the beauty of the stock market. It can be a random day and sometimes it can be very slow, yes. But when there's an opportunity like GT, when the news is announced, there's volume, there's breakout, there's momentum, you can make some really quick profits and be done for the day. So over here you can see GT testing that $15 area. This is 2 minutes after the market open, okay? You can see I'm trying to get in short on that $15 mark. I got in some 2,000 shares at $15 after seeing that, hey, it's testing the extreme daily resistance like we talked about earlier. You can see I got in at 15 and now we want to see whether it's going to reject and then slam back down. Then in that case, I'll add into the scalp position. Or if this thing breaks through 15, I want to stop out for a loss, then look for potential long, even as a scalp. You can see it's back down to that 1460s, 1470s mark. You want to be careful once again because the news is indeed bullish. I'm just taking advantage of that momentum, the parabolic straight up move that's usually followed by straight down. That's all. Remember all the criteria we talked about earlier. I want to see a breakdown VWAP with really high volume, which in this case you can see was starting to break down. I want to see volume to increase. The previous candle was trading around 1 million shares, so that's really high. 5 minutes. I got in some short after that small cover at VWAP. I think I'm trying to get a couple more. Yeah, I got in 4,000 shares short at that VWAP after seeing how heavy it's staying and breaking below that. Once again, volume, breakdown of VWAP, and the stock has downside to that $14 mark. Just let it work. You can see the price action, everything stay heavy. The stock can barely bounce. Until the stock consolidates, you don't need to panic. So now I have 4,000 shares short with an average of 1467. Fast forward a little bit, you can see around this 1420s mark, I'm trying to cover some partial to reduce my risk. You can see I covered a little bit more around that 1420s, so I only have half of my original position left, locking in around $600. Now we're breaking down that $14 mark. You can see no strong bounces whatsoever. I think at this point I'm gonna start covering most of it. This is it's now 9:41, so 10 minutes after the market opens, and I think I'm about to cover all of it, $14. All right. So I locked in about 60 cents per share, 60 or 80 cents per share. Nice little scalp, nothing stressful. It was just identifying the price action and the daily key levels and hit it and let it ride. If we go back to the trading view chart, you can see after I covered that $14, this thing did drop for another 50 cents. So went all the way down to 1350s, then it actually starts bouncing like we talked about. The news is positive after all, so you can actually play the reversal, which is a strategy that a lot of traders in my community trade. On this gap up, you wait for the reversal to go long once the sell-off is done. But yeah, I closed this trade after about 12-13 minutes and locked in around $2,600 on this trade. All in all, the scalping strategy on GT and CVNA added nicely on the day. If you have any questions regarding this strategy, you can ask me in the comment section below. If you want to see what kind of stocks have the potential for you to profit, then you can sign up for my free weekend watch list down below. I send out the watches to you for free every single Sunday, so you can start your week very strong. Or if you want to learn how to build a watch list by yourself, I teach you my complete process in this video.